Okay, guys. So last week I posted this plan, my plan for GU. I intend to engage GU last week on my Telegram channel. If you are new to this channel and you are not on the Telegram channel, I would encourage you to join in. This is why I post all my daily analysis and setup. So for free, completely free, and it is also going to be forever free. So it's not one of those channel where they lure you with the idea of a free service in quote, and then later on they begin to charge you for it. Okay, so feel free to join. So last week I posted the my plan on GU on the Telegram channel. I intend to engage it. And let me see if I can enlarge this. Okay, so this is it. My plan is to go long when if price drops into discount, okay, anywhere around the 4 hour BPR, and take profits at premium and then shorts here at premium and hold it for the rest of the week. That was my plan. That was how I intended to engage GU last week. Okay. And as you can see, let me pull up my trading view. So as you can see, the market played out exactly as I was anticipating. This is the same. Okay, you can see price drop into discount, rallied up into premium. I couldn't participate at all in the long, okay, because I wasn't feeling too well. I wasn't in the best frame of mind, so I was, I was away from the charts. Okay, but by the time I looked at the chart, the market was already here, and I was waiting and looking for a short setup. All right. Now, after all of these trades were posted on the Telegram channel, okay, and after the trade played out, a number of people chatted me up that they couldn't participate because they were scared that it's not going to play out. Some others said that they took the trade, but um they closed it prematurely because they were scared when the retracement and all this retracement happened. And some others said they couldn't take the trade at all, particularly this third trade. All of you were posted on the Telegram channel. Okay, let me see if I can show you. Right. This this was my first execution. This one I had already entered before I posted it on the channel because I use a limit order. And the second position, as I when I'm entering, I also posted it on the Telegram channel. And the third position right here, I also posted that as well on the Telegram channel. So feel free to join if you are not already on the channel. All right. So, like I said, some people chatted me up and they were like, they took the trade, but they didn't have the confidence to hold on to the trade. Some others said that they felt like the market was bullish, they will have this rally here, and they felt like, okay, maybe it's still going to continue higher. They were scared. Okay, so I thought I should make a detailed video explaining my thought process when I was analyzing the trade, why I took it, and what gave me the confidence to even add more to the position when there was a retracement. Okay, so basically I entered here, took some profit here, entered, added to my position here, took some profit, opened another position here, and then took majority off around here. Okay, so a number of guys, like I said, they felt like particularly this first one and this one. Okay, they felt like, well, the market is bullish. Why did I short here? Why did I short here? Some others said the market has dropped into discount. You have an order block in here. they felt like the other block should propel price to take out this trend line liquidity. Okay, so first, the idea of this trade was framed on balanced price ranges, okay, on the higher time frame. Okay, so if we go to the daily time frame, first and foremost, we have, let me hide this, we have this daily fair value gap right here, and we have this other block, which is what I've marked out here. Okay, so this line here is the other block, and if we go to the weekly time frame, this weekly fair value gap is um price has closed below it, rallied into it, and dropped back below it. Okay, now this range in price becomes a balanced price range. Now, what is a balanced price range? A balanced price range is a range in price that price has delivered to, then after redelivery it provided buy side liquidity and provided sell side liquidity. Okay, when you look at it, it can be something in the line of um when you have price, you have defined a range in price, an important range in price. Okay, it can be a fair value gap, it can be a volume imbalance, it can be any important range in price. You have defined it. When price rallies into it, that is what's going on? Why is this? Do I have my I don't have this on. So why is this? I don't understand what's going on here. So if we define a range in price, price rallied into it, rallies up above it and drops back down below it. Something like this. Okay, this is redelivery, this is buy side provision, and this is sell side provision. Okay, when you have price do this, okay, this range in price becomes a balanced price range. When that happens, the algo will heavily defend this area. It will not allow price to rally into it. If there is a rally into it, maybe there is manipulation, the algo will not allow a close inside of it or above it. Okay, so once you have a balanced price range, the algo will not allow price to close inside of that range or close above it. Most of the time, it will not even allow a close inside of the range. The close will be outside of the range. Okay, so that was what I was looking at on the weekly time frame. Okay, I was looking at the balanced price range we have here on the weekly time frame. Look at this. This is a bullish fair value gap. Price has closed below it. Now, first and foremost, when price closes below a discount fair value gap or any PDRA, okay, it doesn't have to be a fair value gap. When price closes below a discount PDRA, that PDRA would act as resistance. Okay, the algo will not allow a close above that PDRA again. Okay, so all through this rally here, I was certain that we're going to close below it. All through this rally here, I was certain we'll close below this area. Okay, now it doesn't have to close below it. It closed below it in this case because this is a balanced price range. Why is it a balanced price range? The market closed below it. This is our range in price, this fair value gap. Okay, price has dropped into it. That is redelivery. Okay, not yet. It is not yet balanced. Okay, it becomes balanced when price provide buy side and sell side. Okay, so this rally we had here, that is buy side provision. The drop down, that is sell side provision. When that happens, that range in price becomes a balanced price range, and the algo will heavily defend that level. It will heavily defend it. Even if there is a rally into it, it will not allow a close inside of that range. It will not allow a close above it. Okay. Sometimes we might get a close inside of the range, but most of the time, like 80% of the time, it will not allow a close inside of the range. But it will never allow it. Let me say never, because in trading, nothing is written in stone, nothing is absolute. Okay, so but most of the time we can assume or say that 90% of the time it will not allow a close above it, like 80% of the time it will not allow a close inside of that range when you are looking at it on the same time frame. Okay, so when price was rallying up, this was what I was looking at. Okay, so I knew that at the end of the week the market should be below this entire range. Okay, I was certain that the market should be below this entire range. Okay, so the trade idea was framed on the weekly and also on the daily based on this order block and this fair value gap. Okay, so if we go back to the 1 hour time frame, this was my first entry um above the fair value gap. Why did I take this trade? Let's go to the 5 minute time frame. We go to the 5 minute time frame. We have this relative equal high right here. Okay. So when I looked at the chart, the first time I looked at the chart after my initial analysis in a week, I wasn't feeling too well, and before going to bed, I saw these relative equal highs, and I placed a an entry just above it. Okay, somewhere around here. That was where I placed my entry, and this is somewhere here. So that was why I placed my entry. I wanted to buy turtle soup, and my stop loss was slightly above the main threshold of this order block. This is a up close candle. The main threshold is somewhere around here. Price actually rallied into the main threshold, so my stop loss was just above the main threshold of the first up close candle. Okay, so this is the balance price range, weekly balance price range. This is the middle of it. Okay, so I was entering like around the middle of the balance price range. So I was certain that at least I know at the end of the week the market is going to close below the range. Okay, so equal high, turtle soup above the equal high, and now I could have added more here as well, but because um I was already in on the shorts here, I didn't really bother myself to enter again here. Okay, so that was the idea of the first trade. Okay, that aside, you can also see this old fair value gap here. Okay, I was certain that on this is a 1 hour fair value gap. Okay, I was certain that on the 1 hour time frame, the market should not close above it. Is it? Oh, sorry, it was 4 hour. So I knew that on the 4 hour time frame, the market should not close above it. Okay, you can see right here, market failed to close above it. Market fail all candles here, market failed to close above. So I know that every return into the fair value gap is a short opportunity. Okay, so the second trade I took was also based on the idea of a balanced price range. Okay, this is a 4 hour fair value gap. Okay, so this is a range in price. This 4 hour fair value gap. Price has dropped down. That is redelivery. Okay, when buy side is provided, that is buy side provision. When price drops down across it again, that is sell side provision. Okay, so when that happens, when price closes above it, the algo would not allow it close below it. When it closes below it, it should not allow it close above it, okay, or even inside of the range. All right. So when the market, you can see when the market closed above it here, I came back into it, you can see the reaction, how price reacted into it. Now, when the market then closed back below it, okay, that becomes inverted. So it should now act as what? As resistance. Like I've said, when you have a discount fair value gap or a discount PDRA, an important key price level, once the market closes above it, okay, it should not close back below it. If it closes back below it, it should not close back above it. Okay, when it does this, the market is in a seek and destroy environment. Okay, so market has rallied up. This became a balanced price range when the market dropped down here. Okay, because here the market had dropped down, that is redelivery or repricing, rallied up above it, that is buy side provision, drop down here on this drop down here, that is sell side provision. So the algo will now begin to defend that range in price because it is now a balanced price range. The market should come there, it will not allow a close below it. In fact, usually it will not allow a close inside of the range. Here, there was a close inside of it, like which I said can happen as well, but most of the time, it will not allow a close inside of the range, particularly anywhere below the mean threshold of the range. Okay. So after the close below here, the balance for our BPR is going to turn into resistance. Okay, so that was what I framed the second trade on. Okay, so if you go to the 1 hour time frame, also on the low time frame, what I use for my entry, for my actual entry, on the 15-minute time frame, we see that the market here, this is a short term high. The market has taken liquidity, drop down. So this now becomes a what? A weekly breaker. Okay, I said weekly, 15-minute breaker. This 15-minute breaker right here. Okay, so I entered just above the breaker and I placed my stop loss above this intermediate term high. Okay, so it's not yet a long term high as at when price was here. Okay, so it's an intermediate term high. Okay, so my stop loss was just above the intermediate term high. When the market is bearish, the algo will not allow price to go above intermediate term highs. Okay, when the market is bearish, most of the time it will not allow a close above an intermediate term high. You can see this is an intermediate term high here. Market rallied into it, but it did not close above it. Okay, so when there is an intermediate time high on any time frame, when the market is bearish, when the algo is in a sell program, it will not allow a close above intermediate time highs, right? So this is a 15-minute breaker. After liquidity had been taken, we have dropped down. The lowest down close candle is this one. Okay, extend it out in time. Notice how the market failed to close above it. It kept, some guys mentioned that through this consolidation here that they closed the trade. Okay, but personally I didn't close my own. I left it open. What I was looking at is this 15-minute breaker. Okay, a close above the breaker will turn it into support. Okay, so that was what I was looking at. As long as we don't get a close above the 15-minute breaker, I'm still confident that the trade is going to play out. Okay, and that was why I was willing. I was able to hold on to the trade all through this consolidation without any fear that the trade is going to go against me. All right. So that was the idea. That was what the first trade was framed on. And when price is leaving a PDRA like this, usually it is going to reach for sell side liquidity. Like we have a sell side liquidity here, sell side liquidity here. When price took the liquidity, that was when I took some profits off. Okay, and the next day, that was on Thursday, I added more to my position here. Why did I add more to my position? It is also based on the 4-hour BPR, because I know that on the 4-hour time frame, the market, the algo will not allow a close inside of the range. So this is the BPR. Okay, notice how it rallied here, rejected, rallied here, rejected, rallied there again, rejected. So I knew that every rally into this 4-hour BPR is a short opportunity. Okay, so that was what this trade was framed on. This was a BPR based on this one. This is a 4-hour BPR based on this one. Okay, basically the same idea. Because right here, when the market dropped down here, that is redelivery. When it rallied up into it, that is buy side provision. Likewise here, rallied up into it, that is buy side provision. Okay, and then drop down, that is sell side provision. Once it closes below it, okay, it will not allow a close above it. Okay, so the all three trades were based on balanced price ranges. Okay, the first trade two was also based on a balanced price range on the weekly. Also, if you also look at it on the 4-hour as well, this is the 4-hour fair value gap. When the market rallied up into it here, when it dropped down, that is redelivery or repricing. After redelivery or repricing, price would need to provide buy side and sell side. When it does that, it becomes a balanced price range. Once it closes below the balanced price range, the algo will not allow a close above it or even a close inside of it. Okay, so when the market rallied up here and closed below it, it becomes a balanced price range. It will not allow a close above it. Okay, so you can see the 4-hour fair value gap after we got a close below it on this candle. The next candle failed to close above it. The next candle failed to, it closed inside of it, especially at the early stages of a price swing. You can get closes inside of the balanced price range, but it should not close above it. It should never close above it. If it closes above it, um, you know, that's it is likely going to turn it into support, or it could also signify that we're in a seek and destroy environment. Okay, so you can see the next day, the next trade, after price has already moved away from it, it rallies up into it and rejected. That was what that second trade was framed on, plus the 15-minute breaker. And the next trade, this is another 4-hour BPR, which I've explained initially. Price has rallied up here, price has dropped down below it, that is redelivery, rallied up into it, that is buy side provision, and drop down below it, that is sell side provision. So because we are bearish, we wait for price to close below it, which it did here, close below it. Okay, this could also have been used to frame a long here, because price has closed above it, okay, after it became a balanced price range. So if it comes back into it, the algo will not allow it close below it. Okay, so you could have taken a trade here with the belief that the algo will not allow it close below it, and then rally up to take profit here. But I didn't take the long, because my higher time frame bias was bearish. I didn't take a long at all. But you could have taken a counter long based on that same idea of a balanced price range. Okay, so the third one, like I said, the market has closed below it here, so the algo will not allow a close inside of it anymore or even above it. Okay, so rallies up here, that was the short. That was my short trigger for this particular trade. Also, on the 1-hour time frame, there is an order block. This 1-hour order block. Okay, extend it out in time. I was looking at it, as long as price does not close above the order block, the trade I did remains valid. Okay. So all through the consolidation, I didn't care. Okay, all I was looking at, and I didn't break even too early. Okay, all I was looking at is what would be my invalidation, what would invalidate the trade I did. Okay, so that was really what I was focused on. As long as price remains above this order block, I am okay with the trade. I'm willing to hold on to it irrespective of the retracement. Okay, and as the market kept on dropping, I was looking at reasons to still hold on to the trade. I could have added more on Friday when price returned to this order block. I could have, added more here, but I was content with enough. Okay, particularly considering it's Friday, you know, usually Friday sometimes can provide a retracement into that weekly range, just like we had here last week where we had these retracements into the range that formed. So generally, if the market has been bearish all through the week, Friday is not a high probability day to look for short short setup, right? So that is the whole idea of the trade. I'm still going to make a detailed, comprehensive um, tutorial, that's tutorial or lesson teaching on balanced price range. There's a whole lot of other things to note and pay attention to when it comes to balanced price range. I'll cover that in future videos, maybe in the algorithmic video series that will be coming up soon. So one of the concepts and the topic that I'm going to cover and how you can anticipate it for me and how you can know which range you want to use. I'm going to cover daily ranges. A lot of things I'm going to cover in the algorithmic video series. Okay, so I don't know when that would start yet because I'm still trying to like structure everything and perhaps next month. Perhaps next month I will start with that series. Okay, if you have questions regarding this, feel free to drop it in the Telegram channel or on the in the comment section on YouTube. Okay, I'll be happy to answer whichever one you have. Okay, so I'll see you guys in the next video.